The Central Bank of Nigeria's 297th Monetary Policy Committee meeting is underway in Abuja, sparking intense interest in a potential decision on the benchmark interest rate. Chaired by CBN Governor Olayemi Cardoso, this critical two-day meeting follows a significant increase in the monetary policy rate earlier this year, aimed at combating inflation and stabilizing the economy, with Nigeria's inflation rate dropping to 32.15% in August from 33.40% in July. Analysts predict the MPC will likely maintain the current interest rate or possibly consider a marginal decrease. We'll see about that later today. But of course, right now, Muktar Mohammed, CEO at Shari Investments Limited, joins me for this. Thank you for joining me today, Muktar.
Thank you. How are you doing?
I'm very well, thank you. Well, the MPC has raised interest rates by 800 basis points this year and of course adjusted the CRR and asymmetric corridor. Now, have all these been effective in tackling inflation and even forex liquidity?
Well, in terms of tackling inflation, you could say for the past 2 months, you could say that we're beginning to see the results. If the data they came out with is anything to go by, but again, when you compare that data to what you have in the street, there seems not to be a correlation between what they're telling us and what we have in the street. But then it's still encouraging that you could have something positive. In terms of FX liquidity, which I keep saying is the key driver of inflationary pressure, we've just seen a little bit stability in the past 2 months. We see that it's over between 1,500 to 1,600 and something. So definitely you can say that you've seen those stability in the FX rate, but in terms of liquidity, I think today is high, tomorrow is down, and so that's why we've not seen the Naira take its real value. We still think that the Naira is still very undervalued, but again, to get to that real value of the Naira, there must be liquidity. For now, we are not seeing those liquidities.
Well, talking about inflation, we know that the NBS is saying that they will rebase, the baskets by November this year. So is that going to help us solve this challenge of whenever NBS releases a result, we're saying we're not sure this is commensurate with what's on the ground? Is it going to solve that?
Well, maybe. It depends. There's sometimes these data are getting from different places. So you need to come out and you don't expect everything to be as good. I mean, the same with what you have on the street. But definitely there shouldn't be this slight variation like what we are seeing now. But hopefully that might help. But again, it's not about whether you rebase it or that. It's depending on where you get your data from and where you're analyzing it from. If you get it from a place like Abuja, is different from what you get. And if that is what you want to use to analyze, it's different. If you get it from Benue, get it from Sokoto, it's always different. Even if they have tried to make sure that each individual states, they try to bring up data as regard food inflation and others. But again, it might help, or it all depends on what type of rebasing they are doing and what are the key indices they are looking at if this rebasing takes place.
Right. Well, you said that we've seen some improvement, talking about inflation and also some level of stability in the past 2 months when you talk about Forex, that's the foreign exchange market. Now, beyond these monetary tools, do you think the fiscal authority has been complementary or has played a complementary role so far, or do you think it came late to the party?
Patricia, they came late to the party. You and I know that they came very, very late, not just late, they came very, very late to the party. I'm not still thinking they will really come to the party, because one of the game changer we're expecting from them is that reduction in tariff for imported household food items. That has not taken place. Remember that the president has given this directive for over 2 months now. The last time we heard about it, the customer were waiting for the Ministry of Finance to let them know definite which of these product will enjoy those tariffs. So if that has come through, then you begin to see that inflation would have come down. So that's, I think, the physical side that not really complement the monetary side. And if you look at some of the policy of the physical side, one of those policy was in the area of it was in the area of I mean, in the area of liquidity in the sector. You see that the cash transfer was still going on through the Ministry of Monetary Account. They have done conditional cash transfer. That also did not help the Monetary Committee in terms of mopping up liquidity. So definitely, in one way, they've not been able to complement, even if they have the right policy. We've not seen that complement yet from them. And also not to forget that the fiscal side is still involved in it. Even if they say it's independent of them, it's the petroleum industry bill. We have not seen that petrol price is still high. We've not seen that fixed rates that we're expecting, especially from local refineries. So there's a lot of work to be done by the physical side. And once there's no that synergy between the fiscal and monetary authority, we continue to battle this inflation and pressure.
Right, back to what is currently happening now as the CBN continues its two-day meeting today. The issues before it would be the high inflationary landscape, Naira's vulnerability, and rising energy prices, which of course we started seeing from this month. What are your expectations across all monetary tools within its arsenal?
Well, I think one thing they will definitely, I want them to concentrate on, and hopefully that's what they are concentrating on, is this FX volatility. Have not really helped small businesses. They have not really helped SMEs. Hopefully that is what they should be thinking. Let's have this liquidity. Let's have the Naira come to its real value. Yes, there's challenges when it comes to summertime. When it comes to the summertime in terms of Naira volatility, it's not the first time. It's not happening because there's no liquidity, or it's the first time it's happening. When it comes to those periods, you talk about school fees, talk about people that are traveling, you see those volatility in the exchange rate. And hopefully, normally the normal trend is that by the end of the last quarter of the year, you see the Naira begin to maintain a little bit of stability, and then you see those reduction in the exchange rate. Hopefully, we will see that. But again, that's also depending on how much liquidity we're able to inject into the system and how much legitimate demand that we are going to make. But October might be very interesting because October 1st is when the government will be doing the Naira deal in terms of local purchase for crude oil, especially for local refineries. So we could see how that could have a very, very positive impact in the exchange rate, especially when you know that based on the data from central bank, about 40% pressure of the Naira comes from exchange rate that has resulted in the importation of refined petroleum products. You know what that will mean if 40% of that is brought down. So that is what we're looking, hopefully thinking that will happen. In terms of energy costs, I don't think that will happen anytime soon, unless we see those Naira stabilize, because the reason why they have high energy costs, they've tried to explain to us, is the exchange rate volatility. Going by what we read just a couple of days ago, the subsidy in terms of subsidy for electricity has gone up comparable to what it was before even getting a lot of Nigerians in band A. So what we might see in the government side, we get a lot of Nigerians into band A. Hopefully that will be commensurate, will commensurate with the type of services they will receive. But I'm not too sure that will, because again, it will be a government desperately trying to reduce their subsidy in energy bill. And that also could also have effect on those that are in band A. You could see also an increment in terms of tariff for those on band A. So that also will exert more pressure on the inflationary pressure and then the cost of goods and services. As regards hiking rate, I'm optimistic that we might not see those hawkish rate hike, especially when you know Nigeria will tend to copy what the others are doing. We are beginning to see moderation. We are beginning to see rates steady in this country. We're beginning to see rate cuts. Hopefully, we should get that, and that also will have a very, very positive impact, especially in the financial space, where if you look at some of the end half-year results of the bank, you realize that we're going into a time whereby they are making provision for non-performing loan. Hopefully with this, if it happens, then you begin to see the reduction in the non-performing loans, and that could make our financial sector more variable.
Okay, so what exactly are you expecting? A hold, a cut, or a hike? And if it is a hike, how many basis points are you looking at? Not what you want, not what you think is ideal now, but what you think the MPC would do. Yeah.
Like I said, if we looked at the body language, we heard it over a week, though they have not come out. We heard it from many international organizations. We read it through the papers. There might be a cut in rate, but we are not expecting that. Before they were saying this, that was before the advert in terms of increase in petroleum price. But now I think we might just see a hold. I'm expecting a hold. All normal rate remains the same. Especially when they've been able to achieve good results for the past 2 months. And then with other fiscal policy that we feel will take stream, it could be a game changer for them. Like I say, one of the fiscal policies is the Naira to crude themselves from our local refineries. So definitely, for me, I think I expect a hold in the short term, but going forward, there might be a cut in rates anytime very soon.
How soon do you expect that to happen? Because if we're talking about, the United States of America, it took them 4 years before they could do that cut. So what are the things we need to see on the ground before we start talking about cutting rates in Nigeria?
Perpetua, you also have to look at our own. We've been also been with them for the past 4 years. We've been doing this almost the same thing, but the challenge is that they are attacking the core aspect of the inflationary pressure, which has to do with supply side in terms of supply challenges. Has to do with liquidity in terms of exchange volatility. So if we want to see what we're seeing in the United States happen in Nigeria, then we need to look at this exchange volatility environment by tariff hike in terms of importation of food item, because the greatest challenge for Nigerian inflationary pressure comes from the high cost of food item, which is very, very tough for almost all Nigerians to have food on their table. And then this is largely due to the exchange rate volatility, largely due to insecurity, also a rising cost of energy, especially in the terms of transportation of these goods. CMG buses, one of those an initiative from the fiscal side, we've not seen them come on stream as we expect. And so all this are why we think that if we want to get those rate cut, number one, we need to look at the rising cost of energy, which affect transportation. So the CNG buses should be there. Hopefully the Naira to crude oil exchange, Naira to crude purchase will help that, especially when the government is thinking of putting the Naira to crude sell at a fixed exchange rate. That could also help drive down inflation. And also, like I said again, the financial sector will become more strong, and then we will see a lot of companies able to pay off their loan, and so other companies coming in to borrow for expansion. So all this will have a snowball effect. When we begin to see that, then we know that it's time to cut the rate. But if you look at the federal government auctions, you look at the Treasury bill, realize that rates on TBs are beginning to go down. So that's a pointer to where we are heading to very soon.
Absolutely. That's a big pointer if you ask me. Now, the adverse effect of high interest rates cannot be overemphasized, and that could exacerbate the problem of non-performing loans. We know even the CBN says, it's just that something has to give. That's why they have to continue doing what they are doing. And this is a significant risk for lenders. So beyond this, what are the other challenges associated with a high interest environment?
I think the basic challenges are trying to high interest environment. It's all called the cost of production, because again, a high interest environment, you begin to see high costs in terms of production, because especially for expansion. And like I said, Nigerian inflationary pressure normally have different policies that are affected. We have the area of demand and supply, inflationary pressure. We have the area of microeconomy inflationary pressure, which has to do with a hike in interest rate. We also have the inflationary pressure that has to deal with cost of production, and that is brought down to high energy costs. And then we also have the one that is mostly common with developing economic exchange rate volatility. Those are part of the things that are really affecting. So most of these things must be addressed outside the hike of interest rate. If we have cost of energy comes down, if we see monetary policy not being so hiking those rates by 100 basic or by 200 basic point, then we see stability, especially in the physical side, and attract more liquidity, deal with insecurity, begin to see how the reduction in exchange rate will also the reduction in rate will also help improve local production, especially when they have to collect loans from the bank. When they are able to pay the banks, we're able to give them more. So those are part of the things we expect that they should be doing now for us to begin to say this reform from this current administration is beginning to see a light at the end of the tunnel.
Muktar Mohammed, CEO, Asher Investments Limited, thank you for your time and your thoughts today.
My pleasure, always. Thank you.